Dan, we are not there yet, but your call is looking fairly precedent. As you know, Mike was just saying that some of these names that have already sold off, they continue to fall further today.
Yeah, I mean, I think unfortunately the big difference, and we've been talking about this obviously since last year, is you have inflation really high and people just forget how much of the market is just driven by liquidity, which some people take, those stimulus checks and the Fed expanding their balance sheet. And some people buy crypto, others buy meme stocks, other people buy houses, boats, and stocks. And so when that money starts to go away, you end up with this starting to happen. And the one metric that nobody really talks about is valuations. And we've been mentioning this for a while, but at the peak of the tech bubble, you take the market cap of the entire stock market, you divide it by GDP. That was at 1.4. That got up to 2 times at one point. It's down to about 1.8, 1.7. But, the average for 50 years is 0.8. So if you've got a Fed that's very aggressive, you've got growth slowing down, you have inflation pretty high, and we've talked about why we think it'll stay high, ultimately, I think the market's down 20%. I do believe with today's move, we have a bunch of technical indicators we look at. We wrote about this over the weekend, but, over 50% of them were signaling oversold. So as much as I'm going to hate to do this, I'll probably be buying some stocks today because, human beings are horrible investors. You're buying at the top because crypto is going to go to 100,000, and then you're selling at the bottom and freaking out because now you've got all this pain and you're trying to deal with it. So, for us, we have over 30% of the portfolio in cash. We said it was our favorite investment coming into the year. And so we're going to put some more of that cash to work, and we'll see what happens.
Dan, how much of it? I'm looking around. GameStop is still above 90 a share. AMC still above 15. Bitcoin at the moment still a hair above 34,000. These aren't exactly like, I don't know, bargain basement prices by historical standards. So at what stage of this, if it is a valuation reset, at what stage would this be?
There's no chance I'm buying those. So what I'm talking about is real companies. So it's names like, Facebook or Google, guys that make lots of money, lots of profits, that are market share leaders, that are profitable today, not 10 years from now, and not based off of some theme that, you think crypto is going to take over the world. So for us, this is looking for real companies and more skewed towards services versus products. Because remember, in 2020, we had, people were sitting on their Peloton bikes, watching Netflix, ordering groceries off of Amazon, and signing their documents with DocuSign. Hopefully by this time next year, I'm going to be sitting on a beach in Hawaii, on a surfboard, in a hotel, on a flight I just took. So what you're spending money on as this pandemic turns into an endemic, and we sort of learn to live with it, like the flu that kills 30 to 40,000 people a year, that's going to change what you're spending money on. And that's what you're really seeing. Don't forget, Netflix missed 2 quarters last year. Amazon missed 2 quarters last year. This is not new. The big new is the Fed's going to be very aggressive. Easy money is going away, and the economy is slowing down from pandemic-driven stimulus. So, yeah, I wouldn't touch GameStop or crypto, but the real companies, that's where we're putting our money to work in.
That kind of reminds me, Dan, of your famous call about Disney when the pandemic initially hit. I see it at 1:30 today. I wonder if that's going to be a name that you're going to take a look at. And also, more broadly, how you view like classical cyclical trades when clearly there are some hints, at least, PMI, retail sales, revolving credit, that households are under pressure, that growth is slowing.
Yeah, and you're absolutely right, Carl. I mean, Disney is it hasn't gotten to the level where I want to necessarily step in yet, but I was definitely looking at it last week, and we'll see. Because it's a reopening play, too, in the sense that, people aren't traveling to go to Disneyland because you're afraid of what's going to happen with Omicron. But I think, a year from now, we're going to get there. And you're right, the economy is slowing down, and it makes sense that it should, because you had $5.5 trillion in stimulus from government, measures over this pandemic. You had the Fed expand their balance sheet by $4.5 trillion in a very short period of time. All of that stuff is backing off. So I think you have to be incredibly selective. Valuations for the first time, arguably in a very long time, are now starting to matter, and cash flows matter because I think Mike Santoli talked about this. I mean, IPOs, et cetera, it's all shut down. So access to free money to fund money-losing businesses is gone.